Good afternoon, everybody. Welcome to the Futures Market Wrap by Ceres Trader. Thank you for those who are on the stream on YouTube as well as those in our Discord trading room. Would appreciate if you're on YouTube to hit the like and subscribe button. If you're in the Discord room, feel free to ask questions on the chat. It was a very eventful day. We had really two good trades. This was on top of yesterday's NQ trade where we went long. Today we actually traded gold, and I think we traded gold pretty effectively. So let's get into it. As always, we're going to start off with the dollar index, and I think that it's important to understand the dollar and what's going on here. There's a lot of negativity in the dollar, but frankly, the chart is not so negative. What you can see here is, and I'm going to pull off the indicators, is that we're still essentially trading in a wedge pattern from the beginning of the year. And with this wedge pattern, when you look at where we've been trading from essentially our lows to highs, we're certainly in an uptrend. And then you can actually see the pattern on the fib develop where we challenged the 61.8% line. Actually, if you look at it, we traded that 61.8% line perfectly in this first series from December through March, and then we actually traded the objective. We've since been looking at what is next, and so we're looking at the series now, and the series actually has traded for the second time, and it's held. So there is really no dollar bearishness per se, and that is going to be a headwind for our gold markets, especially, and anything else priced in dollars. It'll be a headwind for oil. It'll also, frankly, be a headwind for the S&P and stocks and the Nasdaq. But what happens is that generally the Nasdaq and the S&P have an ability, because they have earnings, to potentially grow those earnings, and so they can kind of avoid the increases in the dollar. Gold has a harder time. Gold and silver, the metals. So does oil. So I think that gives you a good understanding in terms of where we're at. The dollar had a volatile day, obviously, but at the end of the day, we have still secured where we were, above where we were last week, and if anything, we probably tested support down there, and we've since rallied with the FOMC announcement. One of the key things to take away from today's FOMC announcement, I think, is that if there is going to be a rate cut, it's probably going to happen late in the year, and it may only happen one time, and that's being optimistic. Frankly, I'm not in that camp. I think that we started off the year with 7 rate cuts, and now we're here at potentially 1. And so at the end of the day, I just don't see a rate cut happening. And ultimately, I think that is going to impact these markets going forward, and especially you can see it in the dollar. The dollar does have higher objectives up above. The other thing that you can take a look at is now we're going to actually take a look at gold, because gold had, I think, a pretty interesting day, and I've been somewhat bearish on gold on the 4-hour, because when you look at it, this certainly is a trend channel down. Now, one of the things to look at is that we're in a balance range, and so that balance range could mean that we're kind of ranging up and down, and there isn't any firm direction yet, other than on the 4-hour, we're certainly in a trend that's lower. And a couple of things to look at on this gold trade. One, we could not rally necessarily. Hold on just a second. I'm going to bring a few more folks into the room here. Some folks wanted to get in on this, so I'll do that right now. Sorry about that. All right. And I think he wants in on it. All right. So let's go back, and we're going to get joined by a few folks here. But I do want to say that when it gets down to it, gold has in this balance range. Gold's been able to look up at the top once here on a 4-hour basis, and so I want to mark that with a horizontal line. And I'm going to actually show that there. And you can actually see on the bottom, it is also tabbed this range. Technically, we're still in a range, but I do think that based on the trends and what you saw today, this range is in jeopardy, and there is a chance that we can go down through the balance range. Now, what you'll see is that on silver, silver's got a trade that's somewhat similar and maybe leading gold actually, and so we'll get into that. But this is a 4-hour trend. A couple of things to note. We actually traded this $80 mark where, we've traded this down $80 twice actually within the last 3 weeks. On the first one, we had a very big rundown from the highs down to 23.27. So that was like a 100-point drawdown, but from this support level, it was 80. The interesting thing is that we actually traded this fib level at the 50, and this was last Thursday night, Friday morning in Asia and Europe, where we first heard actually that in that time frame that China was not buying gold. And so, there was a bunch of things that kind of tipped us off to this potentially being a turning point. But the critical element was that we traded the fib, the 50% fib, and we traded it nearly directly to the pip. We also had what I thought was the makings of a potential trend channel when we traded that. So I put this down and actually created this channel long before you see it here. And then what we ended up seeing was a very dramatic sell-off, down $80 to our lows of 22.83. And what we've been in since is, frankly, in my mind, just a retracement. And I've been waiting for this for a solid 3 days here, Monday, Tuesday, and Wednesday, just biding my time, looking for it to trade up to our 50% halfway back short, and it did so today. And not only did it do so today, but it also emphatically left a couple of things. One, you'll notice that the 4-hour candles are very large, very long, not a lot of wick. This to me screams reversal. Now we'll see what happens tonight, but I do think that there is a pretty substantial possibility that we break this channel. I'd like to see gold trade below 23.16 and ultimately down to 23.10. Breaking this channel and trading below 23.10 would frankly kick off the next run at a move down. And when you do some projections, if we take this length and we run it up through here, the projection would be that we get down to about 22.39. Well, interestingly enough, we have a couple of other possibilities in terms of where our fibs actually tell us that we should go. The TP1 is 22.63. TP2 is 22.44, so it's right in that range, in that 22.40 level, and that's why it's a pretty strong indication in terms of where I think things could be going. Now let's look at a couple other things. I want to show you the TPO chart because I think that this was a critical element in terms of why I was bearish and what we can look forward to going forward. So here's this channel. Everything's replicated. What you'll note is that there was a single TPO in gold spot, and that was at the highs a little bit in the morning. And that was at New York. We traded below it. We went down to the value area high and we found some support there. We came up for a second test, and this second test technically is the second test of our 50% halfway back short level, but more importantly, it was also frankly where folks who got into the trade early and took profit could get a chance to reestablish, and we did just that. What you'll see is that we ended up going through that value area high, and this was a critical thing. I'd wanted to see what we would do there. And usually the trade is when you go through value area high, you're going to possibly go back down to point of control and the value area low. Well, we did get to the point of control. We actually traded the point of control at 23.15 today in the late afternoon, and so we've since rallied off of it a little bit. Now we do have possibly another fib levels here that are coming into play. For those on my channel, I probably would take some profits here if you feel compelled to do so, or you could let them ride. You just have to recognize that you do have a chance that there is a retracement, possibly as high as 23.29. So, I know that we got in that second go around somewhere between 23.28 and 23.30. So, we were a little bit late. We kind of wanted to see what was going to trade here, and then it kind of dropped pretty fast. Given the FOMC. And that's one of the key things that I'd like to point out is we don't always take trades in front of FOMC. As a matter of fact, today we didn't. We wanted to let it trade. It's really important. I don't recommend doing it because that's really, you just don't know how the market's going to react. But once we saw that the sell was in place, we felt like there was a good level. 23.28 happened to be a good level because what you'll notice is that's our value area high. And our value area high, once we dropped below that, I felt very good about selling it there and then just monitoring it and making sure that we didn't get back above, too much above that value area high. We've traded that value area high, and we've got a really good chance of now, frankly, testing lower levels. And this channel is totally in some doubt. We'll be under pressure today, probably in Asia. And that's going to be the frankly, I think the trade will be, how high do we go and when can we sell, where do we start to sell off and how far do we go in terms of the sell off, because this point of control is going to be heavily looked at as well as this value area low. What you'll notice is there is not a lot of space between this value area low and the bottom. There's literally only 50 cents worth of price action. So I think that this structure is somewhat thin, and we'll see. But that's going to be the trade going forward here in gold that I'm looking for. Yes, there is this chance of a bit higher retracement, although technically I think I would be looking at 32.24 as a potential retracement level that I'd want to sell into again if you needed to reestablish the position like some of us do. Let's look actually at silver because I want, silver needs to be the confirmation trade, and today it absolutely was. People say that you shouldn't necessarily equate gold and silver, but I find that they work very well as complementary assets, and the fact is you don't get much of a gold trend without an increase in silver. Likewise, what you'll notice here is that silver has had a really good trend established on really for the last month from these highs. Now, there's always going to be some debate because in theory, this could also very much could be a bull channel. And we did hold some support down here at the lows today. But we also traded the short from highs. And you'll actually see that we traded the short from highs nearly at that 50% level, and we never got above. We never really challenged the 61.8, which is the line in my sand that would actually determine whether or not you're bullish or bearish. So, given that silver has decided to turn down, now we're really all looking at, does silver go below and drop below its support down here? So this trend line is pretty critical. I think it actually equates very well with gold. If you see gold selling off, you'll see silver selling off beneath this little trend line, and that will put, frankly, this entire balance range and this whole channel in a little bit of jeopardy. Does it? So far, we don't think we haven't seen false breaks out of this channel, and it's possible, but we don't know if that exists yet. We've seen false breaks at the top, possibly, maybe not, but certainly there has been quite a bit of activity down there. We have not seen too many false breaks at this channel, so that's something for us to look at. One of the key things, though, to look at too is just how well the metals did in general. And when you look at today, the metals actually did do well relatively across the board, in the sense that copper, platinum, silver, and gold were all up. Same with palladium. We'll see if that trend is the same. It obviously, a lot of these metals turned around over the course of the day and ended up selling off. They were up very big early, and that's part of the reason why I'm actually bearish, is because I think today possibly could be that reversal day. We'll find out. When it gets down to oil, let's take a look at oil, because oil had a pretty eventful day. And I want to look at oil on the daily charts, and we'll get into what all this means. But we've been short oil for a long time, and we've had some great shorts on oil. When it gets down to it, we certainly liked oil on the short side at the 80.28 level. And, we had a number of short sells really from the 85.40 level, and then we caught another 61.8% line sell at 83.75 that went right to its objective and then turned around, and it formed the basis of, frankly, what I think is a consolidation pattern here. Oil is still, in my mind, consolidating, although what you'll find is that from the last fib, we went down, we touched our objective, and we've traded right back up. Traded pretty smartly back up. Now, if you redraw this fib, you'll notice that we're trading just below the 50% line, and today we actually we were within a hair of it at the 79.55 level. Now, personally, I would rather have sold 80.70 to 81.21. That's my preferred sell level. So I'd really kind of like to see oil rally a little bit, but it may not. This could be it. So we'll be watching for weakness today that shows a developing daily bar that is going to point lower. And frankly, that'll be our sign of getting into short oil with an oil objective of $69.17. Now, you're probably asking yourself, how does oil get down that far? Well, oil has a tendency of doing it. It actually did it last December. But more importantly, when you look at the seasonals for oil, May, June, July isn't great. And you don't have to look very far. You could just look at last year. We had weakness come June, and it went all the way into the end of July before summer driving season refill for the fall kind of kicked in. So that's what we're going to be looking for, is we're going to be looking for some intraday setups that will validate and confirm a daily bar that's going to be negative, that will hopefully get us into a much bigger trend here. And this trend does have a lot of room to run. You've got yourself a solid $8 or $9 worth of possible downside here. In terms of upside, literally your risk is $2 to $3. So there is a 3-to-1 trade even here on a swing. If you wanted, we'll be more exact in terms of our targeting. And so that's oil. Let's talk a bit about stocks, because they've just been in a perma bid, and you can't really do anything about it unless you're long. Yesterday we did get long NASDAQ, and it turned out to be a great trade. Again, very solid in terms of its structure, and so we'll take it right from the fibs, and actually that's a good place to start. From the lows here in Memorial Day, what you'll notice is we started trading 61.8% lines in the S&P and the NASDAQ. Now, the NASDAQ somewhat goes a little bit further, and it's not nearly as exact. But the S&P, the ES futures, is a relatively technical instrument. We also traded the objectives. We actually traded to TP2 from that. Since that time, we did not have a normal correction, and so what we've been trading actually is what I would consider an extension. Now, this extension traded a little bit sloppily over the last couple of weeks, but the one thing that you'll notice is that we did not make any 2-hour close underneath this extension long at the 61.8% line. So you should, frankly, based on that, be relatively bullish about the markets, and that's exactly what happened. Is that literally since yesterday morning we have been going straight up, and yes, we have frankly another extension possibility here that we may have traded. And if you look at it from this high to this high, we did find some support at noon after a bit of a decline, and we are trading up. So I still think that the direction obviously in stocks is up, and we'll see whether or not that continues to take place. We'll be looking for ideally some pullbacks to get back into these trends. We played gold today, so we really didn't have I didn't have a lot of bandwidth to do some trades. Although I took a S&P short at the top. Just on the off chance that we would do some sort of retrace, and we started that process. More than likely, we are going to trade this 54.16 level in ES again sometime this evening in Europe or Asia. So, one of the key things that I like to look at is for big levels such as this. Where you potentially could launch into another 100 or 200 point move here in the ES, you're going to trade it a second time. Now, this second test, when we come back down, this is the dangerous test because it's an extension long. We could fail it, and we could drop, frankly, a long ways. Ordinarily, we would be looking for a retracement from the all the way halfway back short. So we're talking about a move all the way back down to possibly 53.58 or 53.29 or even 5300 so there's a potential 133 point move in the ES if we go back down to the 61.8% line. So that's why it is going to be pretty important to see what happens here at this support level. Break the support level, all these bear fibs come into play, and you will be looking for a counter trend short into those bear fibs. Ultimately, though, recognize that stocks are long, at least in the S&P, ES, and then the NQ. Let's talk about the NQ because the NQ has just had monstrous blowout days, and it's just more of the same. On the daily chart, one of the things that you will notice is that with today's price action, we are well above the Bollinger Band. And so generally that should mean that there is going to be some sort of profit taking. And if you haven't taken your profits yet, you might want to consider taking your profits here in the next half hour on NQ. What we're going to see here with NQ is probably a lot more of the same in the sense that it's perma-bid. And when you look at it on the intraday chart, there's frankly a lot of support underneath, and even there's support at the market. What you'll notice, though, is that we are coming right into a level that, frankly, we had some challenges with earlier in the day, and we're already back up, or yesterday, we're already back up here today. So if there is going to be a level that you could sell against, it could be these highs up here. All that being said, we know that there was not a really good retracement. So let's take it from this high here, and what you'll notice is that to this secondary high, we actually traded support at 19,440 a couple of times. Once at noon, and again late in the afternoon today, and we actually jumped pretty significantly within the last hour from it. And a lot of our bulk of our action has really come in the last 20 minutes of trade, even post-market, where the NASDAQ has actually rallied pretty much back up to the highs. So the fact is that it's a tough market to trade. Obviously, if you're going to trade it, you're going to need levels that you could sell against or buy against. Down here, you definitely could have bought against the 38.2. Up here, you may be able to sell against this high, but the trend is higher, and because we traded this twice, there is a very good chance that we go to 19,612 here in the short term, like thinking Asia. Very early in Asia, I do expect that this market will be bid. So something to think about. There's not obviously a real easy sell there, but certainly something to think about. When it comes to the Dow and the Russell, I'm only going to actually look at the Dow because the Dow is the laggard. It's still trading a short, honestly. And so this short has come from the highs to the lows. It is underperformed, and this chart has not changed in a long time. We're actually stuck between a long and a short. The long has traded here, as you can see. The short also trades, and so that's why we've been in this, frankly, 400, 500 point range for literally the last week, going on 2 now. But ultimately, I do think that I like the short down here, and I actually do like the short where there's any weakness, taking the Dow down about 1,000, maybe 1,200 points. So there is upside. It's just a question of where do you get filled. Now, earlier today, people sold at this 39,165. It's a great entry. I did not signal it. I should have. Because that's the second time that that's happened, and we sold off 500 points from there. There's still a lot more to go. There's another, as I said, 1,000, 1,300 points. I'd love to get another chance back there, and who knows if markets are strong, NASDAQ and S&P, maybe we get another chance to trade this range. But it's something to think about, and I wanted to bring that to your attention. Let's look at Bitcoin, and then we're going to look at Bitcoin, and then we're going to look at the Mexican peso. So Bitcoin is at the top of a balance range, and like all these markets at the top of a balance range, you really don't know what it's going to do, but we have some inklings in terms of price action, and Bitcoin has traded a extension long. This extension long pretty much has defended the whole time since January is the peak that we're running this Fibonacci extension from. What you'll notice is that we pretty much stayed above the 61.8% line, which is important, but we are showing some signs of challenges, and so as long as the NASDAQ rallies, there's a good chance that Bitcoin rallies too. If the NASDAQ starts to falter, this Fibonacci level will break the 61.8 at 62,439, and that'll be a sign that we're in for a deeper issues for Bitcoin. All that being said, Bitcoin has traded the 38.2% line twice now, including yesterday, and today we rallied off of it. We did not get nearly as far as I think some longs in Bitcoin would have liked. We do have higher targets. Our targets on Bitcoin, so long as this model exists, this Fibonacci level, is 75,828 as well as 79,718, all the way up to 81,000. And there is a super extension, which is 89,197. And I do think that we can get there if you actually think that the NASDAQ can rally. And I do. I think the NASDAQ can rally into new highs and rally significantly. And if the NASDAQ rallies, Bitcoin will do the same. I do want to update some folks on the Mexican peso because we were looking at the Mexican peso last week. It is now trading, frankly, at some lows that this support level did not hold. And, we had a change in terms of the government. And so basically everybody has decided that they're going to sell the Mexican peso. There has not been a great fib level, although I would say that there was a daily fib that did trade. And that daily fib traded approximately a week ago. We went to the lows. We traded the 38.2. Since that time, 5 straight days, we've dropped right to our 38.2% fib objective. So you can say that, if you've got profits, and a few of you do, if you've got profits in the Mexican peso short on the futures, it's a good place to frankly take profit. We're at the bottom of our slow stochastic. We put in potentially some sort of a hammer here that might see a bid. We have a bit of a fair value gap, and so it'll be interesting to see where we open and how we trade. But ultimately, I think our profits are pretty good here, and so it's time to be looking at taking those profits, or even possibly getting into what I would think would be some counter trend longs. Now, from a long, we don't know exactly what's going to trade here. From a short, actually, we know that the all the way halfway back short can take us pretty much back to where we were earlier, late last week. But one thing is that we also know that we could be trading a series, and that series would actually see us encounter resistance a fair bit lower than the all the way halfway back. And so we'll be looking for it. We'll be looking to try to signal it. I do want to get into the short because I do think that there is a much more substantial pattern here that could mean lower levels, especially since we're taking out this support level here. This is actually a very critical level. If we really do keep going lower and we take out this support level, there's frankly a lot of room to run. And even if we do trade for example, the all the way halfway back longs from lows, we could see down to the 0.4949 level or the 0.4605 level. So this move may only be halfway done. We'll be taking a look. But that's the market action for today. If you've got any questions, comments, please let me know. It was a good day, and we'll see you back here tomorrow bright and early. Talk to you later. Bye.